Hello everyone, today is June 10th and this is 200th episode of Wyckoff Market Discussion, session number 23 of year 2020. We're glad to be here with you, Bruce. Hi, how you doing today?
I'm great, thank you. Great to be here.
Well, that's a good looking cake. Can you tell us the
I got
story
one big
about
enough for everybody, but
This
then
is
I
the
ate
picture
the
that I
whole
received
thing.
from Bruce literally like an hour ago.
I'm having a bit of a sugar high right now.
Okay, well that's good because we've got a lot of material today and we're going to go really fast. So just for those of you who are joining us and not familiar with these sessions, we're going to go through the markets first. That's probably going to take us maybe the first 20 minutes or so. And then after that, because this is a celebration, we're going to talk about the history of WMD, and we're going to talk about certain calls at the major tops and bottoms. That's how we're going to celebrate today, this 200th episode. And we just want you to join us on this case study path throughout this session. I'm really looking forward to this as Bruce and I we're preparing for this session. We were reminiscing about, certain calls, those specific times. So hopefully you will enjoy, guys. Someone's asking, what about this promotion, $79 until next week? Well, for those of you who will be joining us after this session, this is your chance to get in the class for $79 a month. So just go to our website, Ycofanalytics.com, sign up. In the upcoming events, June special, tomorrow with Gary Fullert, a friend of ours, a great tape reader, and he just want to show you how he traded, this whole pandemic reaction. On June 26th, Wyckoff Analytics is very proud to present the first cryptocurrency online conference. We're only going to have 2 speakers. We're small, so we just want to have our people talking. Todd Barterfield from SMI, he's extremely active in this market, and our own Alessio Rutiano. And then after that, immediately July special, that's going to start on July 2nd with Alessio on Wyckoff trading in the crypto market. And, both Bruce and I, we saw his material. It's really, really good. As usual, power charting episodes every Friday at 3 p.m. Eastern with Bruce, and you could catch those episodes later on YouTube channel for Stock Charts TV and for our Wyckoff Trading channel. All right, Bruce, are you ready?
Gotta say one thing, I know we're in a hurry, but Alessio has agreed to be my guest on power charting next week. And he did a fabulous job presenting to the TSAA SF, and I can't wait to have him as a guest on power charting, and I know that his July special is going to be phenomenal. But anyway, be sure to catch Alessio next week on power charting.
Sounds great, and I concur. Alessio is becoming extremely good in the crypto analysis world. All right, well, with this, guys, one more announcement, and this is a very special announcement. Bruce and I, we've been working for months now on the basic charting course. And the idea was always that we wanted to have a bridge before the beginners or even intermediate level students and traders would go through, and they would, have some kind of like a foundation behind just very simple technical analysis concepts and very simple Wyckoff method concepts. And as we started to create in this course, it kind of became a very interesting hybrid of the ideas of how we take a conventional TA concept and translate that into the Wyckoff methodology concept. Now, again, I want to reiterate that this is probably not for advanced traders. This is maybe even hardly for intermediate level traders, but for those of you who would like to know what is the conventional patterns and how they translate into Wyckoff methodology, or what kind of charts we have, how do we define the trend, how do we define the trading ranges, support and resistance, how do we use specific technical analysis tools. Those very fundamental basic concepts are being discussed in this course. We've had so much fun, just going through this material. We've recorded this probably in record time, Bruce. What are your thoughts about this course?
Well, it was really fun to do, and it took me sort of back into my days of learning foundational technical analysis, and I really had a good time sort of reminiscing about that, because getting a good technical foundation is so essential to having a really good trading structure. And so it was just really it was fun for us to put together. I think all the prep work is what took a long time, and then when we went to record, it really just came together really, really well, because I think we did so much good prep work. But I wish I'd had this when I started.
Well, it sounds great, Bruce, and go to Ycofanalytics.com. Find this course under the on-demand products, and we'll be happy to assist you with this particular product. All right, well now, here's another kick. Let's discuss the markets, Bruce. And for those of our new listeners, viewers, we definitely want to showcase what is it exactly that we do with our market analysis every week. What do we do and how do we go about this? And we're going to start here. This is just a 3-hour intraday structure of the S&P 500 with their regional trading range, which is not that visible on the daily chart, but when you go to the intraday structure, you could clearly see the stop in action, the change of behavior as an automatic rally, a couple of tests in phase B, phase C low as a lower low, so therefore a spring, sign of strength, backing up action, and we could take the count and see where that count would bring us. And Bruce, by the way, has a little bit more extended count, so we'll talk about this a little bit later. But as we go through the uptrend that we're still currently in, we're encountering some stop in the middle of this trend, which looks like a reaccumulation. Again, the counts are suggesting that we still have some potential to advance even from this point. And as we're seeing, this is a very interesting trend channel, Bruce. I thought, kind of like put it for our visualization today of the trend. We could definitely use also this trend line right here, and that would work as well. But it seems like today there was some weakness into the close, especially after the Fed announcement, and it's happening around the resistance. So let me start by asking you this question, as I usually do. What do you think about the price structure? Are we still going up at this point, or are we somewhat vulnerable to a reaction?
Well, the thing that Wyckoff always emphasized was that there's an internal stride that will develop in an uptrend very early on. And this advance is really no different. There's a beautiful stride. From the automatic rally, this is a reverse use of trend line up to this area here, very early on, set the stage for an important advance in all these markets. What's happened here recently is that after becoming oversold at that low area of the local spring, it started to march up. Well, look what's happening now. And these trend lines were drawn a long time ago. Notice the acceleration. So this the S&P really shows up, as so do the other markets, that all of a sudden there was just a crescendo of accelerating prices into an overbought condition of the moving average. I mean, into the overbought line, and we can see that in a very small localized way that there appears to be evidence of some distribution. Now, having said that, and being very alert to the idea that we get buying climaxes that come at the end of important moves, there still is the potential for some higher prices in the point and figure work. So it could be that we need to spend some time consolidating here, and then we have a period of upthrusting actions. And so we'll be really on our toes for that, because those up-thrusting actions often are the places where you complete point and figure count objectives. And so this will be something that we will be very focused on in the weeks ahead. Ramon.
Well, one of the other things, Bruce, that I was thinking is the whole Wyckoff story. So we usually, when we look at the chart and when we're trying to translate that into the analysis and then the tactics, we want to talk about what exactly is going on with the institutional participation. That's the Wyckoff story for us. So we're seeing some buying on the way down in this area right here where, liquidity is somewhat not that available, but there is a lot of money there, like big money coming in and buying into the market into this extreme oversold condition. And then something interesting happens. The volume signature starts to diminish, and we're seeing how demand, even though is pushing the price up on the lower supply, but it also diminishes in its characteristics and in its strength. Then suddenly we see the volume peak here, which suggests on the screen that institutions are coming in and the new wave of money coming in into the market in a more aggressive way, supporting the prices right here. Then again, another absorption at slightly higher level. So that suggests not only continuation, but as Bruce said, acceleration, because this type of flat tightening absorption usually leads to big expansion, and usually that's going to be expansion on the increasing volume signature, behind which we definitely thinking that demand is coming in. So there is a very, very strong action right here that we see with a lot of money still coming in into the market, and that kind of probably, Bruce, still suggests that maybe even short term we might have some kind of reaction. But yes, would we actually react, create some short-term value for institutions? They would come in again. And I think it will be a crucial spot for us to see what's going to happen around this area. If indeed absorption happens again, we're probably going to hit an all-time high on the S&P. And obviously on NASDAQ, we've been hitting it, day after day. Bruce, any final thoughts?
And we have point figure counts that do take us up to these areas. We'll go back to the other chart for just a sec. There's four things that I want to just point out here that we talked about a little bit last week, but we have a number of guests here, so we want to review this. And that is that a very important event that's coming up right now is end of the quarter. So part of this acceleration of prices is related to end of the quarter. Now you can call it window dressing, and that's a lot of what it is. Some people have called it short covering, and I think there may be some of that going on, but I would imagine that occurred a long time ago. But the thing that happens is that institutions, which are not composite operators, but institutions, for the most part, will find themselves underinvested in a big rally like this that comes off of an important low in March and then just starts working its way up. As Ramon just pointed out, in this reaccumulation structure that we have in the middle of this chart into that local spring, beautiful pivot off of that demand line, turns up. This is where the institutions start to get active. They were not there at the lows. And so now I think that the institutions are trying to put some of their cash to work, and they're trying to find a way to do it. And some of the ways they're doing is they're buying Amazon right now, and they're buying Apple, and they're buying Tesla, and they're buying Nvidia, and they're also buying these washed out blue chip names, these sort of dirty 30 names like General Motors and Boeing, and the ones that appear to be deep value plays right now. And so those stocks had sort of a rotation in the last week or two. End of the quarter typically is plus or minus, in my research, and this is the way I've been approaching this for a long time, plus or minus 2 weeks of the end of the quarter. So that means that you can get a peak 2 weeks before to 2 weeks after. Wouldn't surprise me at all if this market didn't have momentum through the middle of July. So that wouldn't surprise me. And look at where the low occurred on this chart. It occurred 2 weeks before the end of the quarter in March. So at the end of March and end of the first quarter. So this goes on over and over again. I've studied this back into the 1800s. It's an important phenomenon. Institutions are the large funds that drive these markets, and they're largely focused on quarters of the year and year end and so on. Okay, that's all I'm going to say for today on that, but we'll come back to it in the weeks ahead. So we had important rotation into the washed out value type stocks that started to come to life here about a week or two ago. And actually about May 14th was when they all of a sudden came to life. The other one is the idea of the March of the Generals. It's an old concept, which is right now, what are the stocks that are leading the way and marching higher and really leaving a lot of other stocks behind? And we mentioned them, and these are the big super blue chips, which are Apple, Microsoft, Nvidia, Amazon, did I say Amazon, Tesla, and so on. These are the stocks that are really dominant theme stocks right now. And the last thing is that we are getting close to fulfilling big point and figure counts for this move, but we haven't fulfilled them yet. And it wouldn't surprise me if we didn't spend some time over the top of this trend channel, maybe push through it a few times as we go into the end of the quarter. So anyway, I just wanted to make those 4 points.
All right, great. Well, let's talk about the potential still. If we still might see higher prices, and by the way, you know, we're going to look at the markets and we're going to give you some alternative view on that as well. So, Bruce, is there still something left in the tank for the advance?
Yeah, two super important markets, and we're looking at the ETFs. On the left is the SPY, S&P 500 ETF, and there you can see a beautiful accumulation count in green. I put the distribution count in there also so you could see it and how beautiful it was. And then the accumulation count across that area counts up to 328, 352. And so we have just touched 320. So arguably we're 2 boxes from being at the minimum objective, and it could very well be that this is as close as we get. If that's all we get, really good job in this point figure count. It's done a wonderful job for us. But I think there is, as we just described, I think there is the potential to get into that objective range and maybe even go to the top of it as we push into the end of the quarter and maybe get some more panic buying. Triple Qs have made new highs. They did not fall as much as the S&P and the Dow and so on. And so they showed latent internal strength by not being able to go down as much as these other markets. Built a bigger cause, a bigger count here. 3-box reversal method. This is daily. Both of these are daily data. And this is 2-point scaling. And this count goes up to 244. And I think it's 258. I put a note somewhere about that, but anyway, I'll look that up later. But so you can see there that this count is about to be minimally fulfilled here, but look at that, at new highs. So this is just a beautiful point and figure count. Roman?
All right, well, let's go forward. We have so much material, so we gotta move on. Bruce, this is
I think that was 260. 260 was the height target on that.
All right. This is a very interesting slide, and you've brought to our attention the put-call ratio many times. You know, the conditions pre-COVID-19 reactions were defined as, you know, exhausting for the bulls. back then, and you forewarned us that we might have a reaction. We timed it really nicely. Then we had a big spike into the reaction low, and now we have a huge spike into this bull market. So what's going on?
Well, just a very brief review. If we go back to late December, we can see, so this was end of the year. And so think about this idea of a push, momentum push into the end of 2019, which spilled over into 2020. But notice something important about the put call ratio. Now, this ratio is inverted. So when it's really low, that means there's a lot of call buying, which comes at the peaks. And then when it's really high, there's a lot of put buying, which comes around the area of the lows. And back in December, January, February, and I first showed this chart in early January and said the ratios are really high, a lot of call buying, a lot of speculation, is that there was actually extremes of volume in call buying back in that January, February period. It was a true bell ringer. I think that was historic levels of call buying taking place at that time. And we had said, oh, and then the green line, just so you know, the red line is just the daily plots, and then the green line is the 10-day average. And I think the 10-day average is really important because it takes a number of days of extreme call buying or put buying to get into an overbought or an oversold condition, which is defined by that hot pink line and the yellow line. And so those are sort of the normal ranges of overbought, oversold. And you can see how extreme January, February got. Huge amounts of volume, which you can't really see in this indicator because it's a ratio. But look what's happened here. May, June, we've just had this huge explosion of call buying in relationship to put buying. And something important happened here. Sentiment Trader put this up on Twitter, and I'll just read it to you. This is stunning. At the peak of speculative fervor in February, small traders bought to open 7.5 million call contracts. So that was the extremes we talked about back in February, and when we showed you this chart. This week, this is just the other day, they bought 12.1 million. So their prior record was around 7.5 million call contracts. This time they're buying 12.1 million, and look at where the ratio is now. So can this go on for a period of time like this? Yes, it can, just as it did from December to February. This is an environmental indicator. This is not a precise timing indicator. It tells you what the environment is. And it says that the environment right now is showing an extreme of bullish speculation as measured by call buying versus put buying. And that the ratio is historic again here in June, and that it may go on for a period of time. We may be able to get through the end of the month and into July, but I'm going to say what we said in January and February, and that is that speculators, when they're playing in the playground with this kind of a ratio, speculators are going to be hurt. Speculators are going to be punished, and because they're all on one side of the boat and the boat's leaning way over. And so this is what I think this indicator means as an environmental tool.
All right, Bruce, great. So let's really quickly go through the fear and greed index. So right now it's at 67. We've used it throughout, that whole period from January to basically now. And we saw the extremes. We saw it at 96. We saw it at 1 and at 4. So really quickly, where we are right now And also in terms of the historical data of portraying this indicator, we're kind of like in the middle here. So what are your quick thoughts on this?
Well, that would make the case that because market psychology is lumpy. It's not linear. And so it tends to come all at once. And so if we have like an upthrusting throw over of these trend channels and prior peaks and so on, we could have all of a sudden a big surge of bullishness that could all of a sudden cause the fear and greed index to go towards extreme, what they call extreme greed. And that could come at some point pretty quickly and probably on some kind of a big buying climax jump, which could wait until we get to into the new month.
Well,
So,
yeah,
but
this whole idea, Bruce, and we were discussing, when we were preparing for this session, there is some kind of somewhat of a disconnect here. The fear and greed, we've seen that around the February top, that index was at around 94, 96, I don't recall.
well,
And
and you can, Roman, you can just point to the ratio right there,
right here,
right? Because
yes.
the highest mark was actually at the very beginning of the year.
Yeah. So that was the extreme, and yet we're still not there. That's very interesting. Uh, but still, look at the data that we have from the put and call. So some kind of, a little bit of the discrepancy here, which we thought that maybe suggestive that we still have some pushes up, in the market. Bruce, quick thoughts on that?
Yeah, just that there, there is evidence of potentially higher prices ahead. We're not out of the end of the quarter. There could still be a lot of cash on the sidelines to be put to work by the institutions into the end of the month. And so, there is sort of a cocktail brewing here for that. And so it's a little bit nuanced, but I think that there is the possibility that there could be more fireworks into the end of the month.
Interesting. All right. And let's discuss gold really quickly. So this is something that we wanted to chip in into today's discussion. Gold is very interestingly looking right now. We're gonna go to the our charts in a second and just gonna look really quickly at everything. But Bruce, what is the long-term view here?
Well, you can see that gold's into this important resistance that was set back in 2011 and 2012, and that there's natural resistance selling that's laying over the market, supply that needs to be absorbed at these levels. You look at it, these are monthly bars, you look at daily bars, and there has been a sideways trading range, which has had very little give back. It's been able to just sort of hold at these levels pretty persistently here for the last 2 months. And so that's encouraging for the gold bulls. And then the other thing is that we are up and out of this seeming accumulation area, which was bounded by around 1100, 1050, and 1450. And we're up and out, and we're starting to mark up. And look at how easily prices have been able to mark up from that level. I would just encourage you can go to the August 18 to my blog, and you can look at that chart. And there's also a really nice daily chart in there. And we had basically profiled, and we did it here too, profiled gold when it pulled back to that very important support line. And it's just been acting great ever since. Every reaction has been shallow and on light volume, and it's just continues to just exceed these resistance areas and go higher. And now we're up against the most important resistance area, which is the all-time highs, where you can see, look at that beautiful buying climax overbought condition back there. We could talk about this chart for hours, But here we are many years later and building a cause for seemingly another move.
This was a really great call, actually, because not only we have figured out the bias by that time and timing, but also the character. So we were saying that there's going to be acceleration out of this base, and indeed that has happened. So that was actually really great. Okay, Bruce, we gotta go a little bit faster, so let's jump into the market.
Oh, it's all my fault.
I'm not saying that.
No, okay.
All right, so
So just to finish our thought on gold, gold futures, lower right chart, there's the sideways structure that's taken place as we've approached this overhead resistance. And here we are going sideways through that. And then today, pretty important day, the GDX just kept getting stronger and stronger right into the close, and that's the gold stock ETF. And so after the Fed announcement, gold and gold shares just kept getting stronger and stronger. And a discussion we're going to have in future episodes is talk about the weak dollar, and which could very much be important to the future of the trend of gold.
all right. Well, the flatness of this formation suggests that this is a reaccumulation. We were a little bit early into this position, multiple times actually, and this looks again as a potential phase C. What I liked about this texture here in the price is that even though it becomes a little bit more of the distributional type of texture with the lower highs, lower lows, increased down spread, increased supply levels, you know, it still does not violate or commits below that support level, which is extremely important. So we see the emergence of the effort to push the price down, and yet the price stays up, shortening of the down thrust suggests, you know, still bullish picture. So if this is indeed phase C, we should be seeing the price trying to leave the trading range and probably somewhere here. You know, more supply might come in, some acceleration. So we'll have to see what kind of test we're going to have. As long as we're talking about gold, let's talk about silver really quick, because a lot of you are trading silver, and you know, a lot of our students are showing those trades. Silver is definitely in the momentum run right now off the bottom after a very quick shakeout, which happened to come after a sign of strength, previous sign of strength, where institutions were buying you know, aggressively to the upside. What we're seeing is that demand came in very strongly, pushed the price out of the oversold condition, higher highs, higher lows, higher highs, higher lows on the reaction still suggests structural strength. And then look at the second wave, still quite a lot of demand that is coming in and pushing the price aggressively up. And today, together with gold, you know, silver was definitely performing really well. All right, and by the way, for silver, you know, as we're looking at the big gold formation, look at the long-term causality for this whole potential campaign that we might see. You know, it might unfold in a slightly different way than we're thinking, but this type of aggression, Bruce, I'm thinking in silver suggests that at least a retest of 1850 and maybe possibly even going and testing 20 at this point, just on the momentum alone. What are your thoughts?
Well, when you start to get speculation in silver and it starts to trade even better than gold, big brother gold is a sign that there is starting to be a speculative interest in these markets. So gold will tend to be what gets, you know, the first bids, and it'll tend to run first. And then when silver gets going, it tells you that you're getting into the sweet spot for an important uptrend. So silver has been acting better of late. And if it can jump up and out of this accumulation area, it could literally lead the way for not only silver, but also for gold.
Yes, and actually gold has a very interesting formation here. it's a little bit unusual in the structure. So really quickly, just I forgot to mention, when we have a lot of supply on the way down, and this was a liquidation event, this was a source of funding event. Usually out of this quick oversold conditions, our assumption first is going to be that we're going to be in the trading range. But there is another pattern of vertical absorption where quickly the price is being absorbed right into the resistance, and then the test happens at that level of the resistance, and we're seeing how test is actually successful. All
And
right.
that oversold condition right there was right into the major support on the monthly chart for gold. And so FYI, it went right to the place that it found very important long-term support and turned.
All right. We're kind of jumping from one market to another. Let's look at oil really quick. So our assumption here was that we're probably going to consolidate somewhere in this part of the range between 24 and around 40. So going into this gap, this is a very strong rally. If we would divide this rally into different elements, we would see how demand is starting to deteriorate on the last push. So there is some kind of expectation that we're going to stop here. Maybe, if there is still enough strength in oil, produce an upthrust, but probably this would be an extremely oversold, overbought condition, and we need to revert to the mean at some point. So there might be a short opportunity here. And Bruce, I would be thinking that oil is just basically going to stay here for some time. It just needs time to consolidate all its gains, all its recent gains.
We did a couple of weeks ago, we did a point and figure count of this accumulation structure, and trading count 42 to 45, and a larger base count 55 to 50, call it 59. So those are the objectives that are implied by those two segments of that accumulation.
All right, great. Let's go to Bitcoin and finish with all of this non-market instruments, and then we'll quickly look at the markets. There are some points to be made there. So it was interesting again how after the COVID-19 reaction, the recovery pattern in all of the assets, so the majority of the assets, including different type of stocks, has been the same. We have an oversold reaction where there is extreme value. In this case, the price of Bitcoin actually goes close to 3,500, a series of tests, and then a very speedy recovery into the area where selling has happened. So again, in this type of fast shakeout type of action and fast recovery type of actions, we're going to usually observe a trading range that's going to be created around the highs of this reaction where it started, or where the majority of selling has started. And it's during this reaction that you have to go through the analysis of the tests. The tests are going to be extremely important, and we could see that all of the tests are so far successful. We need to break this low right here and then this lows in order for us to expect some kind of more meaningful reaction. So I would say that it's still at this point, it's an uptrend with the most current trading range stop in action. Bruce, your quick thoughts on this?
Well, just that in March, we have what appears to be a shakeout type action and a rally up to resistance. And it's in this beautiful backup that looks like a classic hinge. It's a beautiful hinge, a pivot, and has that whole structure now looks very much like it could be important accumulation that could go up to these next higher prices back in June, July of last year.
I would
Really
say also,
interesting.
Bruce, that if we would break this resistance, which we were touching so many times, this looks like a distributional pattern, and then we have some demand coming in, pushing up, some supply into the high, a more steadier advance that suggested that demand is kind of in control. Liquidity event again, on the source of funding, And now we are again approaching this level of 10,500. This is going to be the key to break that level, and we might see some acceleration here into the higher levels here if we have that break. All right, well, let's look at the
We've got to get
markets.
Alessio in next week to talk about this stuff. I absolutely need to talk to him on power charting next week.
All right, well, sounds great. Let's talk about the markets now. So NASDAQ has been definitely accelerating. It's been interesting rotation-wise, what we've seen in the last month or so. When we had a moment of weakness, relative obviously to other indices in technology, and you probably have noticed this in your portfolios if you are exposed to technology, biotech stocks, and then during that time, S&P, Russell, and the Dow were moving really well. And now that in the last 3 or 2.5 days, we are seeing some kind of rotation back into the technology. So, Bruce, what are your thoughts on this kind of like very quick in and out? Does this relate to COVID-19, maybe a second wave, or maybe just a perception on the economy, how that changes so quickly? And also, what are your thoughts on S&P, Russell, and the Dow? Because we're seeing some kind of giveaway here, and it's starting to look more and more like a change of behavior. What are your thoughts there?
Well, the Russells, got so many unique problems because it encompasses so many small businesses, and they really are going to have the hardest time in here. The Fed predicted the 6.5% decline in GDP. It's just going to be a huge headwind for companies as we go through now into probably the middle of next year. The thing that we're seeing, and you can really see it in the S&P, NASDAQ 100, Dow Jones, is you're starting to see acceleration. And so my thinking is that, we just need to really just see how much this market can accelerate. It's up against its overbought channel. And so it may be able to get a throw over of that and nominally hit its point and figure counts, but these markets are starting to get very excited. And so we're getting some kind of a climactic event, and we could be still in the early stages of that happening. But these things can always surprise us on the upside. And the example of that I would put forward is January and February. So January, there was a big thrust above an important trend channel. It came back and then did it again in February. And this was all against the backdrop of a lot of call buying. So there could be more to go here, but we are in a very excited market now.
I would say, guys, we have to pay attention to this last bar right here. And by last bar, I mean last bar that has climactic characteristics, expanding spread, expanding volume signature. Those are important bars for us because they show the institutional participation and they show institutional bias at this time. And if this type of bar is being violated with the commitment of the close below that bar, that would basically confirm that we have concluded our upswing and now we are in the reaction. So this is exactly what we're looking for. This is exactly what we're looking in NASDAQ as well, Russell as well. So these are the levels, and Russell is very, very close to that. The Dow as well. So this is the key bar right here for us. All right.
These institutions that are in such a big rush and they're the ones that drive the funds, the money that can make these kinds of bars on the charts. And they're in a big rush here to get into this market and be able to, show some important additional positions on their portfolios for clients into July. We'll think about what happens in July. So these institutions are in such a big rush to get money to work. When they get into July, they're going to be exhausted. Their cash is going to be exhausted, and the whole tone of the market could change once we get into the new quarter.
All right. Okay, well, with that, we are concluding our market discussion. Wow, 45 minutes, Bruce. And let's come back to our
It's the fastest we've ever done it.
Yeah, and look at this cake. Wow, who's that?
Oh, man. That's just enough for me.
You gotta send me some. Why are you eating by
I
yourself?
will.
What is it? Is it only 200th episode, or is it like a standard practice after WMD?
Oh, to have cake?
Yeah, to have a
Yeah,
cake.
yeah, to
Yeah.
have cake.
All right. Well, what we're gonna do now, and this is something, for those of you who were just looking for the market analysis, we're done with that portion. And for those of you who would like to enjoy kind of like a history around WMD calls at the major tops and bottoms, we thought that this would be a great idea just to come back, reminisce, to see what kind of thinking we had at the time, what kind of technical conditions we were in. Maybe there is something there that could actually, give us some perspective on what is going on right now, because conditions usually repeat, especially in the same structure. And I would say that we're still in the same structure since the early 2018. And in green boxes, you are seeing all of those places that we want to revisit and to look at those calls. Bruce, I think this is going to be a lot of fun.
Yeah, and we're going to go really fast through these, but I want to make a really important point, and this is going to be a case study. And the whole drive of the Wyckoff method is to identify that important edge of the cause building phase, either for distribution or accumulation, and that moment when markets go from resting in place to turning into important trends. And this is what our whole mission in life is for ourselves, for you, for WMD. And so we're looking at these areas not just because, it's fun to talk about them, but we want these to be lessons for us. We want to drive home these key points about where the edge is, where great mastery is created in your trading. And so this is why we're doing this, and this is why I think this is going to be so valuable. And Hank, our beloved Hank, who we miss so much, was the one that really taught us how to get onto the edge of these zones where we could then put capital to work and have it work the hardest. So let's just keep this in the back of our minds as we go through these examples. That's all I'll say for now.
Well, talking about Hank, Bruce, obviously there he is in the classroom at Golden Gate University. How many times have we seen him do exactly that? We definitely miss him a lot. So let's talk about the counts on this slide really quickly. This is something that Hank published himself, and then he invited Bruce and me, to participate. And we've published one more article on his counts. He was kind of like a very, very bold, brave man, calling for big counts from the original accumulation ranges. So, for instance, in 2008, 9, and 10, his call was extending the count for the Dow Jones Industrial to about 17,000 and slightly above. And we got into this area in 2015, and that was an amazing call. And obviously, at that time, no one could have believed him, that that's exactly what's going to happen when the Dow was at 7, 8, 9,000. And then,
keep in mind that the count line of that point figure count was 8,100 on the Dow, and what he was counting up to 19,200, and the low was 6,500. And so, I mean, and then he wrote this up and published it in a major publication. It's just and he did it before. So really just remarkably good work, very valuable.
Well, another instance when we started thinking about, big counts was in 2016, and especially when the market started advancing beyond the election low. So then the counts became much more evident and much more confirmatory, and they started showing, and we called it Hank's count, after he passed, 30,000 for the Dow. Well, we came awfully close. I believe, Bruce, we came to 29,650 or something like that.
I
Um,
think it was like 29,568. I mean, it was
so very close.
really good call. Yeah, really.
Thinking about like this count at the 17,000 count line, that was just basically kind of ridiculous, as a call. We always would like to have confirmatory counts. If we have seen 30,000 somewhere here, could we get this count in the original trading range, which was an original secular low in 2009? Well, here is a count to 32,200. If we would take this whole count, and it was, suggested by us to Hank, and he really loved it at the time when he was still alive in 2017, and he definitely approved all of these counts. Bruce, final thoughts on this?
No, let's just keep going. It's just remarkable. Everybody screen capture that page because
Okay.
it's
All right.
just
Well,
brilliant.
now thinking about that count of 30,000, how did we get there? Well, on January 10th, during our session in 2018, we are looking for the emergence of the change of behavior. The market is just going up and up and up, and we are definitely recognizing that we are, like currently, in the overbought condition. So let's pay attention to what are the technical conditions were, imminent, were there for the imminent reaction that followed. So Bruce, this is the intraday charts, 2 hours, the Dow and the Qs, plus the PNF. So what type of conditions do we see here that would, or that actually told us that we might potentially have a reaction?
Well, there was two beautiful reaccumulation counts. So that top chart with the Dow Industrials, you can see a classic reaccumulation that went from late November back into October and built a beautiful cause for higher prices. And actually, that count there, counts up to 25,726. There's actually a blog where I posted those counts called a reaccumulation review January 13th of 2018. You can go back and get both those counts. We just didn't have time to do that. But the other count went up to the same price level. So went up to 25,420. And so they confirmed each other. And the market did go a little bit above those, but when you see confirmatory reaccumulation counts and the market then works its way up into those counts and exhausts itself, and you can see it here with the Qs, you can see this throw over in January, which was a classic overbought condition above the trend channel. Something we think could happen potentially now here is that when you get that, and there's no other point and figure counts that you can see in the uptrend, that either accumulation at the lows or reaccumulation, it tells you that you've used all the fuel in the tank. So I'll just leave it at that, and you can go back and look at those that blog on January 13th of 2018.
All right, well, let's go forward where we're going to January 31st of 2018, and this is where we are. This are all of the slides that we're showing here to you guys. They are the actual slides. We went through all of these years, and we went to the moments where the market either topped or bottomed, and we wanted to show you the slides that we had at the time and the thinking that we had at the time. So there is definitely a lot of acceleration here. Does this remind you of anything what is happening right now in the market? So lots of
Exactly.
acceleration. And look at
Yep.
this last speculative leg. It's just basically vertical. Look at this reaction. In a way, this is reaction right here. So at the second reaction, it's upsloping. So it has those higher highs, higher lows. It's a structural strength, suggesting that if we are in the middle of this channel, there might be acceleration into the overthrow position. And Bruce, that was just such a perfect timing tool with the trend channels here to catch it exactly in that overthrow overbought condition, and suspect that with the reaction, we might actually have a very quick move to the downside. What are your quick thoughts here?
Just that the trend channel analysis is just so valuable. I think it's more revealing than doing moving averages or oscillators or anything else. And we talk a lot about how to construct these trend channels. You do it right. And Richard D. Wyckoff had a very unique way to construct them. You get this right, and it's like X-ray vision. So it's so good.
Bruce, by the way, do you remember, as we look at 2017 period, do you recall what was the biggest catalyst in the market that was moving the market down?
Back in
I'm going
27.
to give you a hint. It was actually in Asia, in one of the North Koreas, right? Remember that? The North Korea
It's so.
missile crisis? Okay, so now that we've been through COVID-19, guys, look at the North Korea missile crisis at that time. Here it is. Here it is. Here it is. That's all they wrote on that at that point of time. There was so much excitement after the US election, which happened right here. I'll look at this initial run after the election with all of the hopes, about the, more money into the system and, all of these policies that the new government would bring. All right. Well, with that, where does it bring us? What was interesting at that time, and this is also January 31st, Bruce, we're looking at the Bitcoin here, and the Bitcoin at that time also has been in the uptrend. And not only that, the Bitcoin also had a similar structure, which had a climactic run, and then, definitely the price overshot the channel and went into the throwover and into the overbought condition. Now, what was interesting, and we discussed this at the time, after the change of behavior that was shown to us in the supply signature, in the down spread as well, and also in the distance of this reaction, it came actually earlier than the market top. And our discussion, I recall at that time, was that this speculative asset like Bitcoin, where a lot of speculation was taking place, this is where the money was coming out of the market, and therefore the same speculative spirit might come out of the market, the actual market, the stock market as well. Do you recall that?
Well, I recall us talking about Bitcoin, and I actually did a video. I did a special video on hypodermics at that time and used Bitcoin as my example, and mainly because, and I went back and looked at hypodermic markets through time, going back even to 29, and just said, this is what they do when they react off of a hypodermic peak, and so be extra careful. And there we are. And I mean, magnificent change of character. Look at that beautiful climactic surge into the highs, which, by the way, came right at the end of the year. So end of the quarter, end of the year. So even that effect influences an asset class like Bitcoin.
Yeah, so that was an interesting call in its own, just to use a speculative asset to see the end of the speculation at the time. And this is what unfolded next. So this is February 21st, 2018. We're seeing that reaction was very fast. Why? Well, because we've had this climactic action. urgent speculation on the way up, urgent selling on the way down, and we see that selling does come. So there was some distributional qualities to this. The question at the time was, are we gonna go into a meaningful reaction where we're gonna drop and actually, break the channel, or is this just a change of behavior that is suggestive of some kind of trading range? So those were the two options that we were discussing at the time. And let's just see
By the
where.
way, let's like bring this back to the present, and that is that when you have an important advance where you get overbought like that, not unlike where we are right now, and even though this advance has only been going up since March, we have to be very respectful of this overbought condition and recognize that when you get a change of character, it can come extremely quickly. And so this response here to this overbought condition is something that we need to keep in mind, and largely because we are operating in markets that really lack liquidity. The reason that the market was able to fall so quickly off the February highs to the March lows is because the markets generally lack liquidity. And so here we are in a similar situation. I'm not suggesting that has to happen here, and I hope it doesn't, but we also just have to recognize from the prior experience that we had back in the prior decline that markets can turn their character very quickly in this kind of a environment.
I actually think, Bruce, that the first leg in the next reaction, actually, anticipating that maybe we're going to consolidate into the election or maybe even in 2021, probably going to have the same type of character where supply is going to very suddenly, come and is going to be a quick move to the downside as the first leg. So we'll have to see. All right, well, this is the intraday studies of that decline. So very rapid deterioration. And we usually go, for those of you who are not familiar with WMD, we usually look at the intraday picture as well, just to see what kind of causality was there for the decline to take place. Bruce, this is from the blog, as I recognize this. And then we also were looking here at the comparison of the NASDAQ, and let's say the Dow and NASDAQ was seemingly, somewhat stronger. What are your quick thoughts here, Bruce?
Well, classic distribution structure on the left in the yellow box, and we had analyzed it at the time, and then put the point figure chart up, which was a 60-minute point figure, one box reversal, sort of a swing trading concept. And you can see that the count didn't get back to the lows, but it put us in the middle of the future trading range, the cause building process. And so that's interesting. We did have other point figure charts that I think worked a little better than that, but it's not bad. And the key is, once you see distribution on the intraday, so the reason we watch distribution on the intraday and accumulation is because you can see things in the intraday that you can't see on the dailies. And so here we are seeing look at the gap down off the upthrust there, and then a sign of weakness before an attempt to rally. And then notice the lack of lift in the rally into the last point of supply. And that just tells you that, here we were in an uptrend that had great bids under it, and it was going up, making higher lows, had great trading character to it, and then all of a sudden it just goes into a buying climax, and then a trading range changes its character very quickly. And this is why traders are so shocked when the market goes down, because the market will go down in a vicious way. It'll start to really mark down and they can't see it. But if you go into the intraday and do the Wyckoff analysis, you can get advance warning about the trouble that's brewing in the markets internally.
Well, let's see how that resolved. Oh, look at this cake, Bruce.
That's a great cake.
That's a great. That's my cake right here at home. So this is going to be for me, after the session. All right. Well, let's see how we resolve this bottom, because remember, guys, the question was, are we going to continue this move to the downside, or are we going into the trading range? Well, obviously, quite a lot of selling that came in on that first reaction down, but then the price quickly stabilized. Right, so we had a local test to the climactic action, and then a higher test, and more importantly, higher highs that were relatively close to the actual buying climax. So that started to suggest that if we're going to have a favorable reaction that is not going to jeopardize the price structure, we might actually be in the trading range. And by the time of this session, which was in May of 16th of 2018, we've already identified potential phase C. We've seen this whole area, and we've talked, I remember, Bruce, so much about absorption during that time, how the volatility started to diminish throughout all of the reactions, how the higher lows suggested that there is some bids under the market, and then how this whole formation reminds us of the trading ranges that are absorption trading ranges. And obviously the rally out of the lows in phase C started to confirm that. And not only that, what was very interesting at that time, Bruce, the participation by small caps and outperformance by small caps was very much welcomed. And we said that most likely we're going to have a rally from here. And here are some of the counts. So please walk us through the counts, and where they went.
Well, and again, the whole idea here is to get on the hinge, so you can really see the pivot in that S&P 500 chart and the NASDAQ chart, and then there's an attempt to come up out of that hinge area and then back up one time. It's still in the count structure or in the accumulation structure, but it's just, this is the area where we really want to get busy. And look at the quality of the rally after the phase C low. So it just starts to really just move up with authority. And so, this is what we were waiting for. These are the things that we live for in our analysis and when we get together in WMD. So the count, so then you're going, oh my gosh, what's the count here? And so the backup, you can see that we had a count from the 2657 count line across there, which is the backup after the jumping out of the hinge, and it counts all the way up to 2985. So it goes up to 3,000 on the S&P. So there is a very worthwhile campaign that is on the verge of completion in that point and figure chart. And for the sake of time, I won't say more, but this is why we do this work.
All right, well, let's see other counts here. So if we look at the big PNF structure, here is that climactic action, that acceleration that we have into the overthrow. Here's that first change of behavior reaction. Here's our hinge. And look at where the counts actually go. They go slightly above the buying climax resistance point. Bruce, anything here that would indicate any large accounts for us?
There is the potential for bigger counts, and we actually did take some larger counts of that area that went to higher prices. And I'm not sure if we have those charts in the slide deck, but anyway. So, but you can just see the emphasis I would make here looking at these charts is just that you can see that a cause needs to be built for an effect to take place. And in each of these examples, you can see the completion of a cause. We can count it with point and figure, and it gives us a roadmap and a perspective about how much potential there is in the subsequent rally phase uptrend that follows. And so that would be the main takeaway I would have from
By the
this.
way, at that point of time in WMD, we had this symbol, reminder of, what we're going to cover during the session. So you could imagine like all of these charts that we would go through at that time. We don't do this anymore. It's just too laborious, but that was a lot of fun to have. All right. Well, this is very interesting. And
But we still go through the chart, the stocks, the individual stocks.
of course,
We do a lot of that. It's just that we just don't list the symbols as we,
yeah.
yeah,
So
we still go through the stocks.
this is very quick but interesting point. So Hank was very uh, much into the Elliott wave theory as well, and he had a class combining Wyckoff and Elliott frameworks, which was really interesting class. I took it a couple of times actually, and one of the semester's papers that I wrote for him for that particular class, FI 498, was a combination, of the schematic of Wyckoff events, Wyckoff phases, and Elliott wave. And I'm not a logician, so I probably have made some of the mistakes here. Later on, Hank adopted this to some of his articles, and also, I've inserted his model on the price life cycle, where we see, some innovators and the adoption of the innovation model is being incorporated into this. And why are we talking about this? Well, because at that time, when we started to rally off these lows, I was kind of like a very simplistic Elliott wave assumption was also confirming that we are going to be in some kind of rally, that we're going to overcome this high, and by how much, the PNF actually was showing. And then what was very interesting, some of the Elliott wave projections that we had for wave 5 actually indicate the same targets, Bruce, as the PNF counts that we had since 2015-16 lows. So that was quite an interesting thing. And I know that you probably have something to say about the schematic here. Quick words on this?
Well, it encompasses all of the attributes of accumulation, markup, distribution, markdown, which was a very important part of the whole Wyckoff methodology, at which Richard D. Wyckoff really emphasized that there's a cyclicality in all levels, long-term to short-term, and it's fractal. So the thing that I have a whole project I want to do around this chart, and I love what Ramon's done here, and so I'm going to conduct a kind of a case study through the whole cycle with examples. And so, but for your sake, please screen capture this and keep it, put it on your wall. I know it's a little fuzzy, but maybe the fuzzy charts are the most valuable. And the thing that I would also point out here is look at how well the buying climax in 2018, this is January 2018, and then a really big range bound condition, and maybe this last decline that we had into the March lows. Now I'm just surmising about this, but is the markdown phase that we've just experienced. But the distribution that Ramon put up there looks eerily familiar to the situation we've had since the beginning of 2018.
All right. Well, great. Let's now, here's another cake for us.
More cake.
200th show. What about September 2018 top? And we have only 15 minutes left. Well, we're going to go a little bit faster. So again, all of the slides that we're showing to you is from the specific time, space, location. Time 9/01/2018, location WMD session. And we're definitely seeing again, Bruce, in the channel, the overthrow. And not only that, it comes actually as an overthrow of the very much important buying climax high. So again, we're seeing the repetition of the same technical picture that we saw before. And I think that this was a really interesting indication for us at the time to start talking about being overbought, being the demand, signature starting to diminishing, and expecting some kind of reaction. So the key would be in this reaction, a change of behavior, and that's what we were looking for. Also, just really quickly, we were indicating that around this area right here, Russell 2000 was outperforming, and that was the actual call at the time as well, that most likely we're going to have small caps outperforming in a more meaningful way than anything else, than the technology behind it, and we had exactly that. So this rally was, so surprising, to the market that the small caps would move so fast. But based on the relative comparative characteristics that you could see in the trading range, that was actually expected. Bruce, your thoughts here?
Looking at the S&P 500, two important forms of resistance, combining to produce an overbought condition. We had point and figure counts that were being fulfilled at that level. Also, notice the climactic surge that was taking place in the last leg up as the market was pushing up into those resistance areas. This is like a trifecta of trouble right there. And also, we're not far from the end of the third quarter. So, whether or not the market can get into the end of the third quarter at this point in the picture, but there we are. I'll leave it at that.
All right, great. So how did that looked on the PNF chart? And we had some projections, Bruce, here. So we were close to hitting them. Please walk us through here.
Yeah, just so we have the account from the March, April lows, and again, a cause builds for an important move up. This is our mission in life, and you can see that counts 77.33, 78.44 is the count range, and as of that overthrow of that trend channel at 76.88, we get really, really close to the count objective, which just shows that the accumulation that was taking place there was super valid, and those point figure counts worked. And then there was a bigger count, which may come into play possibly at a later date.
All right, very interesting. How everything coincides on the vertical with the PNF. Yes, Bruce?
And then also just that you can study this Russell 2000. There's some really nice counts in there too. So.
All right. So remember how we said that conditions are not enough. And this is something that we have to remember right now. We are in that situation where conditionally, environmentally, yes, we are in the overbought condition. We need to see some kind of confirmation that the behavior has changed from uptrend type of behavior for institutional participants into a selling distributional type of behavior. And obviously, there were quite a few signs even before the change of character bar, which was such an extended down spread that broke the channel, did it on the expanding volume signature. But if we would go through the leadership at that time, Russell 2000 and NASDAQ, we will see that Russell actually has started to deteriorate before the change of character bar and suggested some sell signals around the break of the smaller channels, larger channels, and then we were seeing how the leadership is being sold. So the money were taken out of the leadership prior to other markets going down. Also, the same happened with NASDAQ, upthrust, and then the test of upthrust, and then a continuation. So both of the markets, the Russell and NASDAQ, were leading this decline, were indicating to us that something is going to happen in a more meaningful way. Bruce, what were your thoughts at that time?
Well, it was the things that, completing point and figure counts, throwing over the top of the trend channel, fulfilling a an uptrend that had built a cause early in the year, being at the end of the quarter, throwing over the top of a channel, and doing it twice. This looks, looking at the S&P, this looks a lot like January, February of 2020. Two pushes up, two attempts to go higher, and then exhaustion. And notice how there's just a change of character as you push into the new quarter. That's because institutions were putting the last of their money to work into the end of that uptrend. The uptrend drove investors and institutional managers to put money to work into the end of the quarter. And when the new quarter came, they were exhausted. They'd used all their cash. They had no, there was no buying power left. And so, that's why there was such a vicious change of character in the market at that point. So I'll just leave it at that.
All right. Well, definitely started, this reaction started very aggressively. We were discussing at the time how intraday charts and the selling and buying waves on those could give us an indication of what kind of selling and what therefore kind of reaction we could expect. And you could see how quickly, let's say S&P has been sold on that change of character bar on that particular day, and that was suggestive that institutions are capitulating their positions. That was extremely important clue to understand that the reaction might be, more significant than what we've seen at the beginning of 2018. And Bruce, looking at your P&F counts here, we're definitely seeing some lower objectives.
Sure. So there we can see, upwards of 26.9 in Dow Industrials, and look at that reaccumulation count on that bottom left point figure chart, 26.9, 27.050, went right into that zone with a diminishing up thrust on that second push up. And then look at the failure. This is why we talk about looking at the intraday. Look at the way that the Dow Industrials just sunk right down through the bottom of that support area, and then the subsequent rally attempt is pitiful. It looks terrible. Look at how there's no lift, there's no demand. This is a market that's in trouble, and that is a classic place for short sellers to get to work, is right on that last point of supply, which is also often looked at or considered to be ICE, classic ICE in distribution. And then there's also an S&P count, and you can see there a really beautiful swing trading 30-minute point and figure, one box reversal count, 10-point scaling, and did a really nice job of creating the conditions for a good short sale for those that are interested in doing that.
All right. Well, let's look at the continuation of that reaction. Well, actually, this is the Russell and Composite, and look how much more extended they are off the top. So the selling of the leadership has been going on for some time. And obviously, when we talk about the rotation, and we mentioned this today, how we're seeing the rotation in the most recent actions in the last couple of weeks. It was very interesting to see, stay at home economy stocks would be sold, and then the reopening economy stocks would be bought. And then again, we come to the same rotation, only reversed. So this type of rotational patterns where we in our observations of all of the indices, so different sectors, are extremely important and extremely useful to us to identify where the profit starts to take place, and therefore that might spread actually to the whole market. And we've seen this today, Bruce, right? In the last couple of days, Russell is underperforming, S&P is underperforming, the Dow is underperforming. So I wonder, where we will be like in a couple of days on that. All right. So
the just the one thing I was going to say about those point figure counts on the right is notice how beautifully the point figure count or charts pick up the buying climaxes as these big walls of markup where they're just persistent. And then when they stop, there's this classic change of character. Well, look at the comp. Comp creates 1,000 points of downside count there, and it's has just a horrible time just attempting to get back up to the buying climax peak where it has a test 2 boxes lower and then just fails. So the point and figure charts sometimes are, just really tell a story that's much harder to see in the vertical charts.
All right, let's move forward. Now we're into December of
Cupcakes.
2018 bottom. Yeah, do you like cupcakes, Bruce?
Of course, yeah,
I was just
absolutely.
eating yesterday one. Yeah,
There it is.
yeah. So maybe actually I have one left. Maybe this is going to be my 200th episode cupcake.
There
All
you
right.
go.
Well, let's look at this. This was on January 2nd of 2019. We're trying, to go through the whole history of our calls at the major tops and bottoms. We have only 3 minutes left, so we will probably extend this session. For those of you who cannot stay with us any longer, we will email you guys and we'll send you the link for the YouTube video. So don't worry, you do not have to miss anything from this discussion. All right, so on that particular day, where are we in the structure? Well, first of all, we went through a very nasty decline in 2018. Also, we're so mentally exhausted in general as the market, if you remember that sentiment, into the December Christmas, December 24th low, which was very interesting. On the background, some problems of liquidity and some definitive problems in the US-China relationship. In one of the WMD sessions, we actually had a whole catalyst calendar describing this whole move to the downside, how the worries, started to be more persistent and how that started to move the market. And specifically in December, there was some acceleration in that trade war. But at the same time, we were in the extreme oversold condition. We've experienced a selling climax on the climactic volume signature, on the climactic run. We see the throw under in a very significant way. And then more importantly, on the way up, the rally into the trading range starts to show a lot of promise. It just moves too fast. There is a lot of buying on the way up. And we know that out of those type of oversold conditions, we don't necessarily have to have a trading range. We could just have a secondary test, and then we could rally from here into the zone, into the value zone, where the previous fair value was for institutions. So that was the call at the time that we were making. Bruce, any thoughts on this particular slide in that particular time moment?
It was a remarkable liquidation off of the October peak, and it just, in 2 stages, the market was vastly for sale, and then for it to have this sudden low on Christmas Eve below support, which was a shakeout type action, was and oversold in the downtrending channel, oversold on 2 different levels, point and figure counts being fulfilled. It was really just a remarkable event, and it happened very quickly. So let's just leave it at that so we can keep going.
All right, some of the models or analogs that we looked at during that session on January 2nd was Tesla. And the whole idea here is that, coming into the trading range like we did in the markets, you are going to have a change of character, some kind of absorption characteristics that would lead to the rallies where we will start experiencing some local distributional patterns and a short-term downtrend. And that's exactly what has happened throughout 2018. Being in the oversold condition, this analog suggested a rally that's going to come into, again, a point of the consolidation that we've experienced before, and then some kind of pause with an idea that there's going to be some resumption. The quality of that post will define the quality of the next rally. Also, looking at additional confirmations of this model, this Dow Industrial chart from the 60s, 70s, 80s would suggest the same thing, where we would have initial change of character, sign of weakness, and then an upthrust into the buying climax resistance with the local distribution, and then extreme oversold condition from which the price rallies quite significantly, consolidates, and then rallies again. And that kind of became our model. We were thinking that this is what's going to happen. We're going to rally, and then we're going to stop for some time, and then we're going to resume that rally. And from that moment on, actually, Bruce, I think that was probably one of the best calls, for me personally. Also, the February 21st of 2020, yeah, and March 23rd too also was really cool. So quick thoughts here.
The beautiful reaccumulation structure. Look at how the volatility, even though in the case of Tesla, just the volatility is coming out on that reaccumulation texture in green, it goes down, 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 and ultimately springs, minor spring of that key low. But look at the volatility just diminish, diminish, diminish. And then when it turns, it just is this glorious rally up and out of that area. And that is what we look for at the end of accumulation, because the definition of the end of accumulation is the end of absorption. All the stock is in strong hands.
Also, Bruce, this rally reminds us obviously of what's going on right now as well. And that's why, in a way, we're talking about the possible trading range. That unwinding of volatility still needs to continue. There's still a lot of uncertainty, and usually consolidations, show us that uncertainty. During the same session on January 2nd of 2019, Bruce, you brought up the counts of where potentially this rally could go, and wow, that was pretty accurate.
Yeah, that was and the count ultimately grew larger, but we put this chart up and it was at about 22,900 was the count line, 21,700 was the low. And here's a count. There's two counts in there. There's sort of a swing trading count, and then there's more of a larger campaign count. But here at this 22,900 count line, it's counting up to 26,163 to 27,367, and everybody thought we were nuts when we put this chart up. But actually, look at the downtrend line on that point and figure. It came out of there, pulled back for a test, completed the test, and then had a really beautiful rally up through prior resistance, which showed that there was some good demand in this market, and it was building an important cause. And we know a cause has got to form before the effect of trending rising prices. So with that, that was a great chart. We posted that at the time. I think I put it in a blog too. And people were like so shell-shocked by how badly the market had acted into the end of the year. Oh, end of the year, by the way, end of the quarter, end of the year, that they couldn't even conceive of the idea that the market could go up 4,000 points. So.
All right. Well, let's go to the next top, significant top in May 2019. I don't know. This is not the great of the cake, I would say. Bruce, you have the best cake.
I bet that's a yummy cake. I think that's raspberry in the middle.
Oh, yes, that's true.
Yeah.
All
that's
right.
a good one.
Well, let's look actually. We are saying that this is a May call, but we actually looking here into the session that actually gives us a little bit more information about this call. That one is from July 17th, and we've been basically kind of calling a trading range at this point of time. This is what we're going to have, and we're going to show you in a second an analog. And Bruce, just looking the way how the structure started to unfold in the middle of 2019 in this trading range, there was really nothing that was extremely threatening, to this uptrend, to this magnificent rally that we had off the lows in December of 2018. The supply was not really coming in aggressively. We had higher highs even within the structure of the trading range, and the price was really holding well around the support levels. What were your thoughts at that point of time, if you recall?
Well, the count that we took was at the shakeout lows. So the count we just looked at was at the shakeout low, and we took it intraday, and it went up to 27,367, which is right where the market is on the Dow as it's breaking through prior resistance with the buying climax. And so the buying climax of January 2018. And so this is starting to look pretty interesting in the regard that you have an attempt to get back up to resistance again, and you're making higher lows off of a shakeout. So that's pretty constructive. So I think other than the Russell, I think that everything is looking, pretty constructive at that point.
Yes. All right, so let's go into the further discussion that we had at that time, same session. We're looking at some analog price structures. This is from 2016. Again, off the oversold condition, we have a quite aggressive rally to the upside, so that has a lot of momentum. There is a lot of buying at the bottom and in the first portion of the rally. And then, as in 2016, we're seeing a change of character that further leads us to the trading range. And this was a very interesting, fun discussion. I remember at that time we were expecting some kind of consolidation, especially going into the two events that happened close to each other, Brexit and then the US election. So both events had some kind of uncertain component to that as to the result. And obviously that usually leads to the consolidation, which brings us again to the point that going into the election in 2020 and thinking about, the second wave of COVID-19, whether it's going to come or not, whether it's here or not, we probably also, structure-wise can go into consolidation, and that might actually be a very logical way of how the structure could unfold.
I like it.
All right.
I'm just for the sake of time. I'm
Yeah.
like,
Okay.
yeah.
Yeah, we're at.
I want to get them all in.
Yeah, we're at 20 to 5. All right, October 19th bottom. All right. Here it is, right here. This is October 19 low. And obviously, we had to look at this through the prism of the whole trading range, now that we've seen the structure in much clearer view. And obviously, we've been discussing this market with Bruce literally since this low right here in 2016. So that's the amount of time and episodes that it took us to come to this point. And Bruce, it is obviously much more visible now as a shakeout after such a quick recovery. At the time, obviously, it's very hard to believe, and we had a lot of, the calls of the continuation, from just other market participants, other analysts, just saying that we're gonna just basically go and have a major bear market. But the ascent, the aggressiveness of the recovery suggested a bullish market. And then what about this trading range? There is really nothing aggressively distributional in that signature. Bruce, what are your thoughts on this trading range and the actual call here off the low in October?
There was two counts that confirmed each other. You can see there in that July period that there was an important accumulation area that had formed in July, and yeah, right in there. And then also we widened our count in the shakeout area, and it took us up to I remember on the Dow, it took us up to like 29,568 or something. It was like 29,500, we'll call it. And and then we had a comparable count in the S&P. And so we had two counts that confirmed each other. And remember what we said before about how when you have counts and they are used up, accumulation and reaccumulation counts, that would be the place that you would start to look for some kind of a exhaustion of the trend. And so until those get fulfilled, then the trend is continuing to be in force.
All right, and we had some objectives here. Bruce, what are these? Are they confirming each other? What are they showing in terms of where we should go?
So there is those are very large S&P counts. So you can see that there's a segmented count 2960, 3140. And then there's a count in yellow, which goes 3620 to 4000. And those counts one of them has been fulfilled. The other one is potentially still in our future. But there is still important accumulation counts out there. And notice how when you take all of that segment A and B back in 2015, 2016, which goes 3,800, 3,980, and then we have a count that goes 3,620 to 4,000, those are confirming counts. And so that really suggests that there is still further potential ahead of us. And then just so that I can give you this count, on the Dow, off of the shakeout low at the end of 2018, we ultimately had a count that went as high as 29,254. And then in the August accumulation area, the count went 29,509 to 30,177. And so just keep those in mind as we go forward here.
All right. Well, let's look at some other counts as well. So I was also calculating the targets and price objectives. The one that was taken off the low from the shakeout into the 2018 buying climax, which was one of the most important buying climaxes and still plays out its role even today. We had two counts, one is a trade, one is a campaign, comes to 3,500 approximately. It's so nice to see when those counts confirm each other. So that was our most confirmed count at that time. Also, we were relying a lot on the model. This came in October of 2016. October 16th of 2019. This model of the composite index from 1997 to 1999, 2000. What was very interesting in this analog is that the structure in 98, 99 developed almost in the identical way. First, we had a change of behavior, then we had an absorption upthrust action, and then a very rapid decline into the oversold lower low. In 98, the Nasdaq recovers extremely aggressively to the upside, overcoming the previous high. We cannot do this here in 2019, which is still suggestive of the bullish bias, but maybe suggestive that the strength of the next rally is not going to be the same. But this analog suggested that we are going to have a trading range, which in the case of the leadership should be in the upsloping structure. So it's not just the bias and the timing that we're concerned with. As you know, for those of you who have taken or are taking currently WTC courses, we often talk about the character of the move. It is important to us to understand how the trading range is going to unfold, or how, to which extent, the rally is going to unfold. And this model actually worked extremely well. and we were just anticipating this rally after this October low. Bruce, final thoughts on this October 2019 low?
Just that October low, so new quarter, and then a change of character. And so then was this very important run up into the end of the year. So.
All right. How about this cake? I like actually this one.
Really good cake.
Yeah. All right. February 2020 top. And we are starting with this put call ratio indicator. And Bruce, this is exactly what we were looking at that time. Please note how we don't have any reaction yet at this point of time. And yet, Bruce already brought to our attention that conditions were deteriorating. Bruce,
The environment, you're right. It's like the environment was super speculative.
Okay, so how do we use this information? What exactly would we be looking at this point of time when we see that there is indeed this, condition or environment has changed and, we are due for some kind of correction? What would we be looking for?
Well, we start to become tape readers. And in the case of the S&P up there that we can see in green at the top is that there was a January high and an attempt to react. That's the most important reaction that we'd had since the October low. And then another rally into February, which has so far a diminishing thrust. So the thrust of the advance is slowing, which is a sign of impending exhaustion. You can see a similar thing happening back in July of 2019. At the end of the month, there was an attempt to push up above the prior high in early July, and it was a very minor new high and a failure. And so that's exactly what we're seeing in February, as the same kind of thing happening. So and we're in the backdrop of a lot of call buying, speculative, historic extremes.
All right, well, with those conditions, we were definitely in the
Oh no, hit the space bar. Yeah, there we go. So
okay. Yeah, we were
yeah,
definitely in this extreme um, extreme greed condition on December 24th of 2019. So this into the end of the year. And look how it was so low at the December 21st, 2018. So Bruce, I would say that this is a very accurate indicator, at least in this trading range. And we know that in the trading ranges, the oscillating indicators, the ones that go, let's say, from 0 to 100, are going to work really well. So your thoughts here?
yeah. So just the collection of sentiment indicators in this index, which you can go look up, by the way, just do a search for CNN Fear and Greed Index, is at the time that we were putting in the low that we ultimately counted, that gave us a count up to 29,500 in the Dow, was at 3. So that means that there was no bullishness at all in the market at the end of 2018. The end of 2019, it's the exact opposite. And so, and that was the anniversary of the low, December 24th, 2019. Now it's at 91. I think it hit 94, 95 ultimately at the peak. Just can't become more extreme than that.
So we
So
definitely in those extreme overbought conditions, very prone to some kind of reaction. So our next step, well, actually before that, more on the sentiment, Bruce.
yeah, so this is January 8th. You can see there that we're looking at the put call numbers at the end of the year on that chart. And then also, this was interesting, something we picked up off of Bloomberg, which showed short interest on the SPY, meaning the number of short contracts in the SPY, not contracts, but short trades, is super low, going back like almost 2 years. And so there's very little very little shorting of the SPY at the end of December. So.
All right. And some price objectives from the PNF.
Yeah, so this is the point and figure chart that we had done back in January of 2019, which gave us that great count. Well, we widened that count out, and that took us to 29,254 is the high or extreme count, and then that was the yellow box on the chart on the right. Then the light blue turquoise chart in the middle is a reaccumulation count that goes to 29,509 to 30,177. And so we have two confirming counts, an accumulation and a reaccumulation in the uptrend. And so there they are saying that this is where the market has the potential to go before it runs out of gas. Well, look, it's going into the overbought condition on the trend channel. It's also going into a 94 reading on the CNN fear and greed. It's also going into historic put call readings. And this is all happening into the January, February time horizon. And so all of this is taking place. And at that time, we were not quite up to that 29,509 level yet. We were at 28,868. So, but overbought.
All right. And then in the longer term uptrend, we obviously here hitting all of the points of resistance, Bruce, and specifically on this bottom right chart. So this line right here, which is from back then and almost 100 years ago. So we are
those are yearly, those are yearly bars. So I think that's a fascinating chart. So the reason I put the arithmetic chart above it was because I wanted to show the bar and of the year 2019. And you could see that the year 2019 has a climactic quality to the advance on that last bar, which is the whole year. And then notice it when we put it on a log scale, which obviously we always want to do on long term. Look at how well that channel works and how it contains the advances. Even in the end of 2000 there, it bulges over the top of the channel and then comes in. And then finally at the end, at the very end of 2019, it kisses that 2019 yearly bar kisses the overbought line. And so I thought that was just really, and at the time, we're like, it's not likely that it's just gonna go blowing through this channel right away. It's probably gonna have to do some work before it can do that if it remains bullish. And then the chart on the left is just a point and figure chart of that August period and the count, which takes us up to 29,509, just so you can see that count.
All right. So how did we actually time it? So this was tweeted right on the February 21st. And here we're showing that we are in the overthrow condition. We are in the shortening of the thrust condition. We are in the buy and climactic run, and definitely in the overbought condition here as well. And then something unusual has happened. On 2 days in a row, we had such a high volume signature. So as Bruce has said, this is where our tapering techniques come handy. We're seeing that with the increase of this volume signature, with the increase of the result to the downside, there is some kind of synchronicity between the selling and how the price moves down. So that identifies for us the conclusion of the uptrend, and we're just basically saying that at least at the minimum, our potential target is going to be around 9,000 on the NASDAQ. This is going to be the first wave down, and then we have to see what's going to happen. After the change of character, will we be in the trading range, or we will be in some kind of reactionary mode after this attempt to go up? And this was a really good call because, looking at the last time where that has happened, where that type of big volume signature has happened, we're seeing either a major top or again, the same type of the behavior that has happened in September, October of 2018. Change of character, increase of the supply, and we were in those overbought conditions at that time. So history still repeats over and over again. Bruce, quick thoughts here?
Oh, did a good job. Thank you.
All right, let's go now to the last segment. Yeah, this looks good. I would eat this cake too. March 2020, the bottom. So Bruce, looking again at the sentiment, this probably has been one of those weird type of markets from one month to another where we were, and we've talked about this in WMD sessions, where we were on one spectrum of the sentiment and then suddenly in a month or two we are on another. So really quickly, we're close to 5 o'clock here. Walk us through maybe this chart right here just to understand how quickly that has happened.
I think that the Fed has their fingerprints all over these markets, and they, are, trying to, maintain sort of a normal bias to their involvement in these, the trends of the markets, and then all of a sudden, liquidity just goes away, and the markets crashed in this case, and the fear greed went down to 4 at the March lows. Well, look at where the peak was. I mean, look at the speed with which these markets change their sentiment. It goes from nearly being at 100 on the fear and greed down to 4. And I understand that it was like lower. I understand it went down to like 1 or 2. And I just didn't see it. And they change it every day. So, and then the put call is up to, you can see the 10-day average is off the page. The 10-day average put buying is so high that there's nothing comparable in the near term, even back to the 2018 low. So, so the sentiment is just all over the map. The volatility is just impressively incredible.
All right, and with that, as we go down, the key thing was to, again, identify the bottom. We started seeing the changes of character actually on March 12th. This is where a lot of commenting, has happened here in WMD and also on Twitter. This specific slide was presented in WMD and tweeted earlier before the actual move to the downside. So we were looking at two scenarios at that point of time, either a spring, which is going to be a lower low, a temporary penetration of the support, and then a quick recovery. And we wanted to catch the market somewhere here to make that particular call. And this is what has happened. This is this spring here at 21.71. The price gaps down, but refuses to go lower, has a change of character on the intraday level, successful test is a slightly higher low, and then continuation and come back into the trading range. So this was the call right here, just understanding how the whole intraday structure has unfolded, that we are in the extreme oversold conditions. But at that time, and as we usually would discuss it, we would actually be thinking about multiple scenarios. This is important for us to have as a tool to be prepared for any opportunities that come our way. And obviously that second scenario did not materialize. This is the intraday picture of how the low actually has happened. And this also was tweeted right on the day of the low. So definitely check out all of our input on Twitter for that. Look at the gap and look at the subsequent attempts to react to that gap. So no ability to commit below that is a bullish activity. And then in the previous session, there was a very aggressive rally as a change of behavior, which was extremely bullish. And then the price actually during the US session goes and retests those lows, and it starts to retest successfully with the higher lows and trying to penetrate this 2280 resistance, and then the reaction is flattening out. And after this attempt, obviously, this was a confirmation of this whole change of character, the low, the spring, the intraday reversal, the intraday change of behavior, the intraday breakout, and the confirmation. So that was the actual call at that time. Bruce, quick thoughts on these two slides?
No, did a great job.
All right. So
We're almost to the end.
yes, almost to the end here, 5 o'clock. So where would it go? What would we show? Again, please note the date. This is March 25th, and Bruce is showing us that there is, quite a lot of potential. And one remark that I'm going to make here is that that potential was all in the volatility at that time. Volatility allowed big institutions to accumulate in a meaningful way. Volatility allowed for the price structure to unfold with additional columns, and that built the causality. So Bruce, again, kind of a little bit inconceivable that the targets are going to be so high when we're like in 180s range.
Well, let me just say about point figure is that at the lows, particularly, the volatility just becomes immense. As you all recall from the March lows, the volatility just is extreme, and volatility is what creates point and figure counts. So you can see on this chart on the left of the Qs that a tremendous amount of volatility is produced between around March 10th and March 24th. And that volatility creates a cause, because volatility is how stock changes hands from weak hands to strong hands. And so that is effectively what's going on when you see a big count being built, whether it takes months to build that count or it's done in days. So in this particular case, you can see in the Qs that at the 168 count line down there, which is one box off the low, that we have a count that goes up to 256 to 264. So 168 to 264, and that count forms in a very short period of time because of the immensity of the volatility. And as of today, the high was just under 248, 247.82. So we're starting to get close, and the market is starting to accelerate as the Qs and other markets work their way up into these counts. So, and we're overbought, and we have high call buying on and on and on, and into the end of the quarter, which could, continue to cause a rush of buying as we go into the end of the 6 months. And so this is just, to me, is a remarkable chart. It's just remarkable, and it's fulfilling. And we showed it at that time.
The last slide. So this is the analog, Bruce, that you brought to our attention after the low, the analog from 1962. So are we still in it? Are we still kind of following this analog?
This touch of the downtrending trend line, which we're defining as a shakeout in 2020 in March, is the point from which the market rallied. The shakeout in 1962, which we talked about in depth, I even wrote a blog on it, but notice that there was a rally from that shakeout low up to the uptrending trend line of a expanding formation here and a broadening, what's called a broadening formation. And so in both cases at the UTAD, it threw over and then it failed. It failed very, very hard. It just liquidated. And that actually, so that rally, so we've had a rally off the shakeout low here in the Dow, and we know that the Dow has, since the time of the publication of this chart, has rallied up to, I'll give you the high from 2 days ago, 27,580. So we've gone up to 27,580, which is the rising trend line. So it worked out really well. So now what happens from here, if in fact this analog continues to hold, this is a really important place because we're up into this trend line now, which is a form of resistance just above the buying climax peak of January 2018. But notice what happened back, this point and figure chart on the bottom right, that area right there is 750 on the Dow, if you can imagine the Dow ever being that low, is that it subsequently consolidated there very briefly and then rallied from 1963 all the way into 66, and it's the first time the Dow hit 1,000. It went right to 1,000. And so if that holds true, that's about a 1/3 move from here upward. And so that could very well be what we're looking at if this analog continues to hold, and so far so good.
All right. Well, with this, thank you guys for being here. Sorry it took us a little bit longer than we expected this to be. So we went beyond by about 40 minutes or so. But it was a lot of fun just to go through the history of WMD. Obviously, I always tell Bruce that at this point, at the 200th episode, WMD is not just a class. WMD is an institution. And this means that we have specific rules, behaviors, specific audience, and specific way of how we look at the markets. We invite all of you guys who are new to this class to join us. The promotional rate of $79 is going to be here until next Wednesday morning. So please sign up. Let us know if you have any questions. Shoot us an email. And Bruce, it's been such a pleasure for the last 4+ years to look on a weekly basis at the market with you, to hear your views, to share my ideas, and just to have the discussion about the market. It's been a pleasure also, guys, to have you, as our contributors. So obviously, you guys are contributing in other ways, with student submission, with the content that you provide us with. We're really, really grateful. This recording will be available tonight on the YouTube channel. So for those of you who joined us later into the session, you could see the current market analysis at the top of the session. Also, if you would like to sign up for this sessions with Bruce and I, please go to our website, Ycofanalytics.com, find that class and sign up. Bruce, last thoughts?
Just so grateful to all of our Wyckoff Nation family and for you being here. It's just a joy to contribute with you. I would suggest that for anybody that would like to have additional help in navigating these very tricky markets, that to give us a try at this promotional price for a few months and see if we can't add value to your trading and also help you to develop your Wyckoff mastery. And so we would love to have you join our family, and we think you're really going to get value from being here. And thank you all.
Thank you, guys, and bye-bye.